Qualitative characteristic number 3 is comparability. So we're going to give that the memory tool Q3 to help us remember that. Q3 is comparability. What does it mean? Well, this is going to be quite long, but we'll simplify it and we'll say accounting information is more useful if it can be compared. We don't usually like to use the word itself, compared, in the definition, but in this case we kind of do. What we want to say is information is more useful if it can be compared over time with information from previous periods and with similar information from other businesses. How can you compare Apple and Google, Myer and David Jones, Coles and Woolworths, etc.? Because we all got to play by the same rules. All right, we want to be able to compare the information between businesses and over time. So this is our definition here. Okay, so we've got a definition of comparability. This is it. The next bit's a little bit of background. How do we do this? Well, we can do this by using the same accounting methods every period, and also treating certain transactions in a consistent manner. And what if we do that? The users of accounting information can identify and understand similarities in and differences among the items within the report. So this is the fancy bit down here, right? But look, what's comparability? We want to make sure our information can be compared over time and with other businesses. Let's have a look at an example. So the users of accounting information must be able to compare the financial information of the business from one period to the next. So these are actual figures for Harvey Norman. So in 2017, revenues were this, expenses were that, good net profit. And look, it's set out nice and simple. Excuse me, the revenues are at the top, expenses in the middle, net profit at the bottom, and all the transactions were treated the same way during that time. It's set out in billions. And in 2018 we did the same, 2019 we did the same, 2020. I can now compare Harvey Norman's performance from one period to the next, and it's a pretty good trend. Look, it went down from 4.45 billion to 0.38 to 0.4, but then it went well. I guess we could say over time, Harvey Norman, lock it in the bank before COVID, you're going to get a profit of around 0.4 billion every year. But what about this? We can also see sales are going up. Really good trend to be able to identify. Also, the problem here is, though, expenses are going up, and they're actually going up a little bit more proportionally than revenues. So that is like, 12 numbers there I'll give you now. And even though it's very limited information, you can compare Harvey Norman's performance over time. Now, if we always treat things the same way and always set them out the same, we can also compare that to other businesses. So again, this is real-world data. I just got it from the ASX website. All these businesses have to publish it. Here's the 2020 results here for Harvey Norman. Is that good or bad? Well, we said over time, we can see it's going quite well. Is it good or bad compared to its competitors? All right, well, who are their competitors? I guess one would be JB Hi-Fi. So we've got revenues here. Oh, they make much more revenue. So we can say bad job, Harvey Norman, but their expenses are way higher. And in fact, if you look at the final net profit, I'm very happy with that. Harvey Norman's done really well. Why don't we compare it to Myer as well? Myer did not do very well in 2020. Obviously, COVID impacted everything, but we can see because things are set out the same way and all the transactions have been treated the same, I've got a really good comparison here. Harvey Norman is kicking the ass of JB Hi-Fi and Myer. Okay? And the beauty of this report is these numbers and these reports is that they're comparable. I can compare Harvey Norman's performance over time, and I can compare it to its competitors, its other businesses in its industry as well.